What's up, guys? Welcome back to Roensch Capital. This is going to be the first installment of a new series I'm doing for beginner day traders. I'm going to take you guys through all the basics and what I think are the kind of need-to-knows to make you the best trader with as much potential edge as possible. Because edge, statistical edge, positive expected value is the name of the game. In this one, we're going to talk about how to utilize the level 2, commonly called the box in trader slang, and why I think it is one of the most important, if not the most important tool that we have as traders. Let me let you in on a little secret. The chart, for me, is the past. By the time I'm in a trade, and I don't know if this is entirely well known among beginner traders. For me, and I think for a lot of traders, by the time I'm actually in a trade, I'm done with the chart. Now, it's in the corner of my eye, but I'm entirely focused on the box, on the level 2. And that's how I make my decisions on when to cut, if I'm managing that particular trade manually, when to add, when to sell all or cover all, when to cover a quarter of my position, half. All those decisions are based on the tape. My eyes are glued to the box, not the chart when I'm in a trade. And it's a big disadvantage, I think, to only be watching the chart, especially if you want to be a quick day trader or a scalper, a true scalper. So first of all, this is what things look like, okay? This is all just Tesla. This here is, of course, the chart, the 1-minute chart, showing us what I like to think of as the past. This is the psychology and the algorithmic movement of the last 40 minutes or so. Okay, here on Tesla. This, here on the right of your screen, that tall looking thing, that's the tape. The tape is slang for the time in sales. That is what I like to think of as the present. Okay, that is all of the orders going through right now. We'll talk about the tape in another installment here in the Beginner Day Trader series. But the tape is also very important, but while I'm trading, it's also in the corner of my eye. I'm watching the tape more than I'm watching the chart when I'm in a trade, but this here, this thing with green, salmon color, and a blue and white, that's the level 2. That's the box. I like to think of that as the future. Okay. For me, when I'm in a trade, by the time my entry gets executed until I'm completely out, my eyes are glued to the box. Okay, it's an incredibly helpful tool. So let's talk about this. I'm going to take you guys through some stagnant screenshots so we can really get a grasp on what the box is and how it works. I think you'll find that it takes some time to learn how to read the box, but it gets a lot easier once you start to understand what's actually going on. And then once we're done with the screenshots, then we will take a look at some live views and just see if we can catch anything interesting happening in real time. So here we go. I wanted to start with a thickly traded stock to make things really obvious. Bank of America is a great example. If you're a momentum trader, especially a momentum scalper, Bank of America is probably going to be just about your last choice of stock to trade. It's very thickly traded. Okay, I'll get to what that means in a second. First of all, level 2 is called level 2 for a reason. Does level 1 exist? Is level 1 a thing? Level 1 is absolutely a thing. Take a look. Level 1 is simply the best bid and the best offer. Both of these are coming through on NASDAQ, NSDQ. This over here, these are going to be the routes, okay, that those orders are sitting on. Here is NSDQ 51, okay, at 33.50. So here we have the route. Here we have the amount, the size of the order. Always add 2 zeros. They're counted in hundreds. So that's not 51 shares. That's 5,100 shares sitting at 33.50 through NASDAQ. Okay, now here, this is the offer. Also commonly called, probably more commonly called, the ask. That makes up the bid-ask spread. So in this case, the bid-ask spread is from 33.50 to 33.51. The bid-ask spread on Bank of America is almost always 1 penny. Okay, This here's the ask, also known as the offer is what I typically call it. So moving forward, I'll probably call it the offer a lot. We have coming through also on NSDQ, NASDAQ, 43, so 4,300 shares are sitting at 33.51. Okay. Now, if you wanted to buy right now, think of it this way. All over here are buyers on the bid waiting to buy. They're like, I want to buy, but I don't want to pay any more than 33.50. So they're waiting to get filled at 33.50. And these are also the sellers. Think of the level 2 as everyone being a little bit stubborn. Okay, these are the sellers. They're all saying, well, I want to sell, but I don't want to sell for any less than 33.51. All right. Now, the colors. Okay. Well, first of all, so if you wanted to buy right now, you don't have to wait at 33.50 with everyone else. You can just offer up, which is slang, trading slang. You'll say, I'm going to offer up and pay 33.51. Okay. Now, if you also wanted to sell, but you're like, I need to get out now. I don't have time to wait for a penny a share. I don't care that much. I just want to sell it, whatever. You know, I'll sell at 33.50. I don't mind. You can, quote, hit the bid. That's, again, trader slang for just hitting the bid and selling. And if you do either of those things, you'll fill essentially instantly. Okay? Because there's people waiting. All you have to do is walk up and take their offer or bid. Okay. Now, these colors, green, pink, salmon color. It's salmon. It's not pink. And blue. These, and white, of course. These are customizable. Let me tell you what I used to do. I used to use a teal to very light teal gradient, where the darkest color teal was near the top, and then it would get lighter as we go down. I then switched that to a green gradient, where it was darkest green at the top, and then a light green all the way to like basically white at the bottom. But I have since switched to this because I went through a few variations. For my eyes, especially if I'm watching more than one box at a time, this works the best by far. So what I have here is you have why is it color coded, right? Well, the green is color coding 33.50 because that's the best bid right now, and it's the same. Okay, why are they separated? Because they're all coming through in different routes. You see that? So we have 5,100 sitting on NASDAQ, 1,800 sitting on BATS, 1,500 sitting on ARCA, 1,300 sitting on EdgeX, 4,900 sitting on NYSE. Okay, you see all these. They're all at the same 33.50 though, but they're separated by route. Okay, so 33.50, the best bid is going to be color-coded green. This is how we decide if something is thinly or thickly traded. Same thing over here on the offer or the ask. 33.51, but it's all separated by the routes, and you can see. So if you wanted to know, okay, how much size would it take? Like how many, for example, shares are currently sitting on the offer? It's not 4,300. You have to add all these up. 4,300 plus 1,000 plus 800 plus 700. Typically what I do, because this moves fast, and we'll see this in a second once we get to live, some live examples of level 2. What I typically do is I just really quickly in my head, this is why it helps to be able to do math in your head very quickly as a scalper. And you'll get better at it if you're not already good at it. But I just typically look at usually the ones with, in this case, 2. Sometimes there's 3 numbers, right? That would be, you know, so you have 4,300 here. If you added a 0, that would be 43,000. And I just add up the big ones in my head, and then I add a little bit more in my head, and I go, okay, so it would take, you know, it might take 8,000, 9,000 in this case to push through. Something like that. 10,000 would probably push us through. So, in order to immediately jump to 33.52, either you would have to see a lot of these offers get pulled, which means have the orders canceled, or you would have to have a big buyer just say, well, all right, I'll just take all those orders. Okay, and then the other buyers push through to 33.52. So, why does that help us as traders? Well, you look at a stock like Bank of America, and you can see here that there's a lot stacked. Okay, you call this like a bid stack. Okay, stacked on 33.50, and a lot stacked on the offer. Then we move down to pink. Okay, well, it's salmon. So, dang. So you have on edge A, 33.52. And then it gets to a lighter salmon color at 33.53, right? That's how I've set it up. And then we go to a darker blue at the next increment, 33.54, and then a lighter blue at 33.55, and anything over that is just white. Because I don't really want to look at that, right? I'm worried about what's happening right now and in the immediate future. Same thing over here. You go down and you notice, where's 33.49? Well, there's nothing sitting on 33.49 at the time of this screenshot. 33.47 is the next, 33.46, and then you see here I have limit up, limit down, that's LULD. That's the halt point. Okay, so if this, boom, dumped to 32.14 out of nowhere, you would wait a second, and then if it got pinned there, it would halt. Okay, so I know all the halt levels. This happens on this side as well here, as they're coming. So if I'm trading a stock that's about to get halted, boom, I can get out. Or if I think it's going to be a false halt, like to the downside, for example, and I notice that there's not a lot of size over here on the offer stacking up, I can say, I'm going to front run this. I think we're going to false halt. I'll boom, get in, hit the offer with very minimal risk. If we get stuck there, I'll get out and I'll lose basically a penny or a couple pennies, depending on what the bid-ask spread is. Or what oftentimes happens is in a false halt scenario where you don't end up getting stuck to the bid, like it loads up like tens of thousands or hundreds of thousands of shares on the offer where the limit up, limit down is a penny lower over here. If you see really light size over here on the offer, like I'll front run that. And then oftentimes you see a trampoline-like effect and it false halts and bounces and I teeter out as a quick little scalp. Okay, so this is a very thickly traded stock, Bank of America. They don't all look like this though. I wanted an extreme example to start. Let's move on. This is Nvidia. Okay, look, it's a little thinner. It's more expensive. Things spread out a little bit more. So all you have here is 2 with not very much size. Okay, that's the green, right? That's the best bid and best offer. So the spread here, think about this. What's the bid-ask spread? Do you know? If you don't, that's okay. Here it's 20 cents, 779.64, 779.84. Okay, so for example here, what you'll oftentimes hear traders say is they'll say, yeah, I offered up, I got in, but what I wanted to happen didn't happen, so I just hit out really quickly and I lost the spread. You'll hear scalpers say this a lot. What they mean by that is they offered up, so they paid, in this case, $779.84. And then as a scalper, what you want to see happen is you want the thing to move in your favor very fast. That's why you got in. And as a scalper, it's imperative that you manage your risk and you manage your risk quickly and tight. So in this case, you hit it, you hit the offer, you offer up at 779.84. Let's say it doesn't start to move in your direction quickly. You say, I gotta hit the bid. So you hit the bid, you lose the spread. What does that mean? You lost, if nothing moved, about 20 cents a share. Because you offered up, you paid $779.84. What you wanted to happen didn't happen immediately, so boom, you hit the bid, you lose the spread. You lost 20 cents a share, and you knew that going into the trade, that if you had to hit out, you would lose 20 cents a share if it didn't happen. Now, of course, if the trade were to go against you, typically your risk management on a stock like Nvidia, maybe it was 50 cents a share, maybe it was $1 a share. You had all this in your head before you entered because you were looking at upside of maybe $1.25 a share, maybe $1.50, maybe $2, $3, $4, $5 a share, right? It helps to be able to do a little bit of math in your head and understand that you're typically looking for, at least me, I'm typically looking for winners that are a little bit bigger than losers on trades that have anywhere from like a 55 to 70% win rate. Okay, now, of course, you can take a trade that you find has a 95% win rate, and in that case, you can have losers be bigger than your winners. I like to stick to trying to catch bigger winners than losers. It keeps the stats a little cleaner. So let's move on here to the next example. Here you have Root. This stock happened to be in play today, so and yesterday, so I grabbed a screenshot of it. So you have a 5-cent bid-ask spread here. The best bid is 13.02. Best offer is 13.07. And you can see here that, you know, there's a little bit more size on the bid than there is the offer. So in this case, what's really interesting is you can look at this. The more size that loads up on the bid and the more extreme that imbalance is, in this case, you could say, okay, it looks like at this split second, the buyers are a little stronger than the sellers, right? You have that best offer stacked a little higher than the best bid is stacked a little higher than the best offer. Okay, now, thinly versus thickly traded. Remember Bank of America? That was very thickly traded. Each increment was thick, and it was about 1 penny apart for each increment. Here, right, it's a little thinner. There's a little less stacked on each bid, each offer, and there's gaps. You see this? 1307 is the best offer. Next, 1311, 1313, 1315, 1316, 1319, 1325. And you go down here, over on the bid, 1302, 1297, 1294, 1290, 1258. It's gappy. There's gaps. It's thinly traded. For momentum scalpers, what does that mean? Well, that means that this thing could actually ratchet up the ladder quicker, right? Because it takes less pressure to move it up. So if someone just hit the offer at 1307, that cleared. Someone hits the offer at 1311, boom, price jumps to 1311. Because the actual price of the stock is just the last price it was traded at. Boom, skips to 1311. Someone hits the next offer, boom, skips to 1313. You don't have to go penny by penny. You can ratchet up the ladder quicker. Thinly traded stocks tend to squeeze much, much faster. If we go back to Bank of America just for a second here, you can see that in order to move up 3 cents, it has to go through all of these, 32.52, 32.53, and then 32.54, and then to go another penny higher, it has to go through 3,100 shares to get to 33.55. Very thickly traded, does not move very fast, typically. All right, let's go to the next example here. Supermicro computer, very in play as of late. This one has been a little bit spready. It's a little tough to manage risk on. But as long as your stops are set properly and you're catching big enough winners, it has been tradable. You look here. The best bid, 978.51. The best offer, 979.95. You're looking at a bid-ask spread of about $1.40-44, right? That's wide. That's kind of wide. Now, if you get stopped on this, you could expect some slippage because that next bid, when your stop is triggered, is going to likely be lower than the last price it was traded at. All right, and when you get a stop loss, when you're long, it hits the bid. But you can see here that it's relatively thin to the downside. Why is it so thin to the downside? But why is it thicker to the upside here? This is a really good example. You can see here that look at this, 979.96, 980, right? It's heavy at 980. We have 2,600, 1,200, 100, and 2,000 at 980. Whereas to the downside, you know, for that equal amount of tiers, for example, of stacks, you go down and it's 975.53 because there's not as much size and the orders are more gappy. They're further apart. Okay. Why is that happening? Because you have a round number at 980. A lot of times orders will stack at round numbers. It's very, very common. Okay. So in this example, I would definitely not, me personally, if I didn't see any of these orders moving, I would not be hitting the offer looking for a break of 980 because all these orders are just sticking there. Okay. There's a lot more downside risk and the sellers are in control here much more than the buyers. Look at the tiny little size on the bid. Now, what I might do, and this is getting a little bit advanced, but I'll toss it in here just to get you to start thinking about this. If this shot up to 980 and we saw 980 stuck on the offer, and all of a sudden this 26 turns into 18, this 12 turns into 7, this 20 turns into 12, this 26 then turns, or this 18 now turns into 9. The 12 gets cleared, or the 6 now gets cleared. This 12 gets down to 3. You see it going down. What does that mean? It means buyers are hitting it, taking those shares, buying at 980. What a lot of scalpers might look to do, hit the offer, get in, look for a break through 980, and if you don't get it, you can just lose the spread, hit the bid. right? If 980 just sticks, you can just hit the bid and get out. A lot of times what will happen in scenarios like this, if you're fast enough and you manage your risk properly, is you basically have, I like to explain it this way. You have a crowd of people pushing on a fence and it's not moving. And all of a sudden they take one big step back and they push through and they all fall on top of each other and barrel forward through. The fence finally breaks. The fence is 980. When that seller fence breaks, a lot of buyers will fall through, especially if they're using market orders, and they'll just ratchet up and the stock could spike to 980.50 or 981, 982, right? Look here. Boom, I risked maybe 50 cents or $1. In the worst case scenario, I risked $1.50, but a lot of times what will happen is these bids will move up as we get stuck at 980. You'll see the bid-ask spread tighten as buyers kind of like outcompete each other. So maybe in that case, the bid-ask spread might have tightened down to about 50 cents. Boom, the buyers push through the fence of 980, stock ratchets up to 982. I take it off the table for a quick 5-second scalp. 4R. The reward was 4x my risk on the trade. That's what I'm kind of looking for on stocks like this. That's why the level 2 can be so powerful. All right, let's move on to another example here. Look, SPY, great example. This is a pretty thickly traded ETF, right? You can see similar to Bank of America. It's pretty tight, but being more expensive than Bank of America, you can see here that we go from 507.54 down to 507.48, down to 507.39. 507.55 on the offer, right? 507.56, 507.57, 58, and then you move to 76, okay? But these usually, with algorithms, they fill in really quickly. So let's say you take out 507.55 on the offer, you take out 507.56, you move up to 507.57. A lot of times that bid-ask spread will immediately, boom, get thick at 507.56 to 507.57, or 507.57 to 507.58. Okay, that's very common on SPY. You see here, Tesla, for example. In this case, you have a lot more size at 197.32. One tier at 197.31. So it looks in this case like, hey, the buyers are more in control than the sellers, right? That's not actually necessarily true. Because as soon as you take out this little guy, the green guy at 197.31, you get up to 197.32 and all of a sudden, it's a little more thick on the seller side. These are things that you have to be considering. And by the way, your eyes, if you start watching a lot of boxes, you start watching a lot of level 2, paying close attention, this all gets a lot more simple. Okay, your eyes start to adjust. You start to see the bigger numbers as they come through. This 10 sticks out like a sore thumb, right? Especially if you start seeing 100, 500, 50,000 shares, right? 500,000 shares. You see that and all of a sudden, boom, you can front run it. Or if you're already in a trade and that you're long and all of a sudden 500,000 shares pops up on the offer, you go, oof, that's probably going to get rejected. It's not budging. The number's not going down. I'm going to hit the bid and get out before that rejects hard. Okay, very powerful. You can see why I'm not watching the chart while I'm in a trade. I'm watching the level 2. Okay, so that's all there. Now, let's take a look at some live examples here. I just want to show you guys a few. So if we look here, again, this is Tesla. You can see here, look, it moves quick, right? It looks intimidating, but I got to be honest with you guys, it gets easier. The more level 2 you watch, the easier it gets. Okay, so you look here. Now, again, the tape is moving. I'm always keeping an eye on this. We'll go over that in another installment here of beginner day trading, right? But you can see it moves fast. So it's less about actually interpreting like, okay, what is it on NASDAQ? Is it on NYSE? No, what I'm watching here is if I'm long with a stop set, for example, let's say I'm not managing the risk manually where I need to kind of like know the bid. If I'm long and I'm just looking to manage the trade on a profit-taking basis because I'm allowing the computer to take care of my risk management, my eyes are glued right here. The offer and the size. I want to know, is there anything that pops up that goes against my trade, that goes against my reasoning for getting in the trade? Okay, for example, if a 500 or a 5,000 popped up right here, all of a sudden I'm thinking, oh man, You know, we're coming into a round number, for example. We're coming into 193. Man, a 5,000 popped up. That's 500,000 shares. I'm going to go ahead and take my profit off now before this gets rejected. All right, now let's go to, let's look at Root. Root's going to be moving a bit slower here, right? You can see here the time in sales is moving slow. This is a much more thinly traded stock on the level 2. You see that? It goes on the offer on the right there, 1973, 1975, 1979. Here we go. Now we switch 1973 to 1980, or 1673, 1683, right? Things are moving. Okay, now here, let's go to Lunar. Lunar's moving a lot today. Right, there we go. 996, 997, 998. This is a little more thickly traded heading into 10, and it gets a little more thin on the bid side as we come into that round number. The reason is the bid side is more normal. It's pinning up against the 10, but it's a little more normal as it would be if we were at like 930 right now. But as we come into that round number, it's very common to see things start getting stacked ahead of and at 10. Okay, it's not uncommon to see that at all. So you can see here that you have quite a few sellers putting offers trying to front run that $10 region because they can see, well, 10's been acting as kind of a resistance area. I'm just going to get as much as I can, get out about a nickel ahead of 10. So you can see how this becomes very powerful. Listen, I hope that helps, guys. If you want to come join the group, take a look at that first link in the pinned comment. We're trading every single day. Let me know if you have any questions in the comment section down below, and I might just do a whole installment of this series on that particular topic. Thanks a lot, guys, and I'll see you in the next one.